Welcome back to the Crypto Strategist, your home for the latest crypto news, XRP updates, and deep dives into the stories that really matter beneath the headlines. Today, we're tackling one of the biggest questions circulating through the XRP community right now. Is the idea of XRP reaching $2,000 a realistic future possibility, or is it simply another wave of internet hype? Over the last few weeks, social media has been flooded with bold predictions, eye-popping thumbnails, and sensational claims suggesting that XRP is destined for unimaginable prices. Some analysts have even suggested that four-digit XRP valuations could eventually become reality. But while everyone seems focused on the number itself, very few people are taking the time to examine the foundation beneath those predictions. That's exactly what we're going to do today. We're going to separate the excitement from the evidence, the speculation from the structural changes happening in the XRP ecosystem, and the emotional reactions from the actual market mechanics. By the end of this discussion, you'll have a much clearer understanding of why major investors are paying attention to XRP, what institutional players are quietly building behind the scenes, and whether those massive price forecasts deserve serious consideration or healthy skepticism. Before we jump into the details, I want to remind everyone that nothing discussed in this video should be considered financial advice. The cryptocurrency market remains highly volatile, and every investment decision carries risk. My goal is not to tell you what to buy, sell, or hold. My goal is to provide information, context, and perspective so you can make better informed decisions for yourself. The crypto space often rewards patience and punishes emotional reactions. That's especially true when massive price targets start dominating the conversation. It's easy to get caught up in excitement when someone throws out numbers like $500, $1,000, or even $2,000 per XRP. Those numbers grab attention because they trigger imagination. People immediately begin calculating what their holdings could be worth under those scenarios. But successful investing isn't about dreaming about the outcome. It's about understanding the process that could potentially lead to that outcome. That's why today's conversation is less about a specific price target and more about the underlying developments that are changing XRP's position in the broader financial landscape. Understanding those developments matters far more than any headline prediction. Let's start with one of the most important developments currently taking shape in the XRP ecosystem. Somewhere in the coming months, a massive amount of capital could begin flowing directly into XRP purchases. We're not talking about retail traders making speculative bets. We're talking about large-scale institutional participants with significant resources and long-term objectives. What's particularly interesting is that this capital isn't expected to enter through some private arrangement hidden from public view. Instead, much of it is intended to acquire XRP from the same open market where everyday investors buy and sell. That distinction may sound minor at first, but it has major implications. When institutions purchase assets directly from the open market and then hold them for extended periods, they effectively reduce the amount of available supply circulating among traders. Every XRP moved into long-term storage becomes XRP that is no longer actively competing for daily market liquidity. This concept isn't unique to XRP, but the scale being discussed has captured the attention of analysts across the crypto industry. The question isn't simply how much money is entering. The question is, what happens when that money consistently targets a finite asset with limited liquid supply? One of the companies drawing significant attention is Evernorth, a firm created with a highly focused mission. Rather than building another crypto exchange, wallet provider, or blockchain application, Evernorth is positioning itself as a dedicated XRP treasury company. Its primary purpose revolves around accumulating and managing XRP holdings over time. That's a very different business model from what most investors are used to seeing. Instead of generating revenue through traditional operations, the company's strategy centers around maintaining and expanding a substantial XRP reserve. To accelerate its public market presence, Evernorth plans to enter public trading through a merger structure that would allow investors to gain exposure through conventional brokerage accounts. For many traditional investors, this removes several barriers that have historically prevented participation in digital assets. They won't need to manage wallets, secure private keys, or navigate cryptocurrency exchanges. Instead, they could potentially gain XRP-related exposure through a familiar stock market framework. That may not sound revolutionary to crypto veterans, but for traditional finance participants, accessibility often plays a major role in adoption. What makes this development even more noteworthy is the caliber of individuals associated with the initiative. The project has attracted attention because of connections to some of the most recognized names in the XRP and broader crypto ecosystem. Industry veterans with extensive experience in blockchain technology, institutional finance, and digital asset infrastructure have become involved. These are not individuals known for chasing short-term market excitement. They have spent years helping shape major developments across the crypto sector. When experienced executives and investors commit resources to a long-term XRP-focused strategy, the market naturally takes notice. That doesn't automatically validate every bullish prediction circulating online. However, it does suggest that sophisticated participants see strategic value in accumulating XRP exposure. Institutions generally operate with a different mindset than retail traders. They focus on years rather than weeks. They evaluate infrastructure, utility, regulatory developments, and market positioning. Their involvement doesn't guarantee success, but it often signals confidence in an asset's long-term potential rather than short-term price movements. Another critical detail that deserves attention is the amount of XRP already controlled by large holders. A significant portion of XRP's total supply is not actively circulating through the market on a daily basis. Some XRP remains tied up in escrow mechanisms. Other portions are held by long-term investors, institutions, and entities that have little interest in selling at current prices. This means the amount of XRP truly available for active trading is considerably smaller than many people assume when they look at total supply figures. Think of it like a large warehouse filled with inventory. From the outside, the warehouse appears packed with products. But if most of those products are locked away under long-term contracts and unavailable for purchase, the amount actually available to buyers is far smaller than the headline inventory number suggests. The same principle can apply to financial assets. Total supply matters, but liquid supply often matters even more when demand begins increasing rapidly. This brings us to the phrase that many investors are overlooking: off the open market. Those 4 words may ultimately prove more significant than any specific price target being discussed. When institutions purchase XRP from public exchanges and move those assets into treasury reserves, they're effectively removing liquidity from the market. They aren't simply making a trade and moving on. They're reducing the pool of XRP available for future buyers. If enough organizations adopt this strategy simultaneously, the impact on supply dynamics could become increasingly noticeable. Markets are ultimately driven by the relationship between supply and demand. When demand rises while available supply shrinks, upward price pressure often follows. That doesn't mean prices move in a straight line. Markets remain unpredictable. Corrections, volatility, and setbacks can occur at any time. However, structural shifts in supply and demand tend to carry more long-term significance than temporary news cycles or social media trends. That's why serious investors often pay closer attention to accumulation patterns than headline predictions. Now let's consider whether Evernorth represents an isolated case or the beginning of a broader trend. Evidence suggests that other companies are also exploring XRP treasury strategies. While their commitments may not match the scale being discussed by Evernorth, they indicate growing interest in treating XRP as a strategic reserve asset. This is important because financial trends often begin with a handful of early adopters before expanding more broadly. We've seen similar patterns before in cryptocurrency history. Years ago, the idea of publicly traded companies allocating substantial portions of their treasury reserves to digital assets seemed highly unconventional. Eventually, several firms took that step, and what once appeared radical gradually became part of mainstream financial discussions. Adoption doesn't happen overnight. It tends to unfold gradually, with each participant making it easier for the next participant to follow. If XRP treasury strategies continue gaining traction, the cumulative impact could become increasingly meaningful over time. At this point, it's worth addressing the prediction that sparked much of the recent debate. Some XRP supporters have circulated projections suggesting that XRP could eventually reach $2,000 per coin. Numbers like these naturally generate excitement because they imply extraordinary returns. However, evaluating such forecasts requires understanding the scale involved. Market capitalization matters, supply matters, economic context matters. A $2,000 XRP valuation would imply an enormous overall valuation for the asset. The size of that valuation would exceed levels that many traditional financial analysts currently consider realistic. That doesn't necessarily mean XRP can't appreciate significantly from current levels. It simply means that extraordinary claims require extraordinary justification. Investors should be cautious whenever a forecast is presented without a clear explanation of the mechanisms needed to support it. Price targets are easy to publish. Building a logical case for achieving them is much more difficult. This doesn't mean every bullish argument should be dismissed. In fact, there are legitimate reasons why many investors remain optimistic about XRP's future. Institutional adoption continues expanding across the broader crypto sector. Regulatory clarity has improved compared to previous years. Infrastructure surrounding the XRP ledger continues developing. Payment solutions, tokenization initiatives, and enterprise-level applications are receiving increasing attention. These are tangible developments rather than speculative narratives. They don't guarantee a specific future price, but they contribute to a stronger foundation for long-term growth. The mistake some investors make is assuming that acknowledging positive developments automatically validates extreme predictions. Reality usually exists somewhere between blind skepticism and unlimited optimism. Understanding that balance is critical for maintaining perspective in a market often driven by emotional reactions. One of the most overlooked dangers of sensational price targets is the effect they can have on investor psychology. When people become fixated on an extreme number like $2,000, they may begin viewing realistic gains as disappointing. Imagine XRP rises substantially over the coming years, delivering returns that outperform many traditional investments. Under normal circumstances, that would be considered a significant success. But for someone emotionally anchored to a 4-digit prediction, meaningful progress might feel inadequate. This mindset can distort decision-making and create unrealistic expectations. Successful investors typically focus on trends, adoption, utility, and risk management rather than obsessing over a single future price point. They recognize that wealth is often built through patience and disciplined decision-making rather than chasing the most aggressive prediction available on social media. At the same time, responsible analysis requires acknowledging the risks. Treasury companies accumulating XRP are not guaranteed success. Market conditions can change. Regulatory environments can evolve. Institutional interest can fluctuate. Corporate strategies can shift over time. Even companies with substantial resources face challenges. Investors should avoid assuming that every initiative will unfold exactly as planned. The crypto industry has a long history of unexpected developments. Optimism should always be balanced with awareness of potential obstacles. That's not negativity. It's simply realistic risk assessment. The strongest investment theses are those that remain compelling even after considering the challenges and uncertainties involved. Stepping back from price discussions altogether, perhaps the most important story is the transformation of XRP's reputation within the financial world. For years, much of the conversation surrounding XRP revolved around legal battles, controversy, and uncertainty. Today, the narrative appears increasingly focused on infrastructure, institutional participation, and financial integration. That's a meaningful shift. Markets often reward assets that evolve from speculative concepts into functional components of larger systems. Whether XRP ultimately becomes a dominant player in global finance remains to be seen. But the fact that institutions are dedicating resources toward building products, services, and treasury strategies around XRP suggests that many industry participants see potential beyond short-term trading opportunities. The XRP ledger itself continues attracting attention for reasons that extend beyond simple price speculation. Tokenization efforts are expanding. Financial institutions continue exploring blockchain-based settlement solutions. Stablecoin integration is creating additional opportunities for ecosystem growth. These developments may not generate the same excitement as a viral price prediction, but they contribute to long-term utility. Utility is important because sustainable value creation often depends on real-world usage rather than temporary enthusiasm. Speculation can drive markets for limited periods, but lasting adoption typically requires practical applications. This is one reason many analysts pay close attention to ecosystem development rather than focusing exclusively on daily price movements. When you examine all these factors together, a more nuanced picture begins to emerge. On one hand, the claim that XRP will inevitably reach $2,000 appears highly speculative based on current market realities. On the other hand, dismissing XRP entirely ignores significant developments taking place beneath the surface. Institutional accumulation, treasury strategies, expanding infrastructure, and growing financial integration all represent meaningful trends worth monitoring. The most rational position may lie somewhere between extreme bullishness and outright skepticism. Investors don't need a $2,000 XRP to justify paying attention to these developments. Even far more modest outcomes could have substantial implications for the market and for long-term holders. As we wrap up today's discussion, remember that the loudest number in the room isn't always the most important piece of information. Headlines come and go. Price predictions rise and fall. Social media narratives change every week. What often matters most are the underlying structural shifts taking place quietly in the background. Right now, some of the biggest names connected to XRP are participating in efforts that could remove significant amounts of XRP from active circulation while expanding institutional access to the asset. Those developments are real, they are measurable. They are happening regardless of whether XRP ever reaches the massive price targets dominating online conversations. The real story isn't necessarily the prediction itself. The real story is the growing interest from serious participants who appear willing to commit substantial capital to XRP's future. Keep watching the supply, keep watching the adoption, keep watching the infrastructure. And most importantly, keep thinking independently while everyone else gets distracted by the biggest